Hey, what's up guys? John here. I believe we're going to see the biggest multifamily real estate crash we've ever seen in history. And it's not for anything that we've ever learned in history. Generally what we learn is large debt levels, people extending themselves, the little curveballs here and there that, throw many landlords off their game, and some of them will lose their properties. But what we're likely going to see now is a multi-pronged approach that is going to strip landlords of their properties. It's a very, very challenging situation because over the last 2 years, what have we seen? We've seen the relationship between landlords and tenants greatly divide. It's been very unfortunate for the tenants, very unfortunate. These tenants have been hit with 15, 20, 30, 50% rent increases, like crazy rent increases. But the landlords have also seen higher vacancies, higher insurance costs, higher repair costs. They have their own problems, right? And so what is going to be the solution? It's very fascinating to look at this problem, a 10,000 foot overview and see things from both sides. What I think is going to happen is I believe that food costs are going to continue to soar. I believe that we're going to see rising costs, whether it be through cell phone bills, health insurance, car insurance, gasoline prices, car parts, just living. Everything is going to get more expensive. And I genuinely believe that the mainstream media is going to start putting out more and more and more content and a division towards landlords and tenants to further elicit action from tenants against landlords, so that what ultimately happens is that they start to say, hey, the real problem, it's not inflation, it's not this, it's not that, it's the landlord. The landlord's gouging you. The landlord is the one ruining your life. We need more protections for tenants, right? And they're going to make things harder and harder and harder for landlords to hold on to their properties. And then what we're going to see is actually large corporations come in and acquire these assets, right? And they're going to acquire these assets. I would not be shocked to see, an Amazon, a Walmart, one of these large corporations start buying large blocks of apartment buildings and simply putting their own employees inside of these units and baking in their wages, factoring that they're going to get reduced rent or living for free. They're going to live for free, or they're going to live at this reduced rent, and they're going to get X amount for food and for X, Y, Z, and they're basically going to become property of the corporation. This would not surprise me at all, but we're already seeing it across the board with this inflation problem. It's getting out of control. We're already seeing a lot of changes with eviction moratoriums. San Diego just bought an eviction moratorium back 2 days ago, right? So we're seeing things happen. I was in a sushi restaurant just a couple days ago, and there was a TV in the background, and they were talking about how they need to do more things in Florida for tenants, right? So we're moving in this direction, and I believe the natural progression is likely going to be a massive real estate crash in multifamily real estate that is going to really just be a problem for landlords. But this is a very interesting perspective that I'm looking here. More multifamily landlords are making less than their lenders. Sales of multifamily assets have been hot in the past year, but rising interest rates are now putting investors into a bind. Negative leverage in the sector is as widespread as it was in the subprime crisis. The Wall Street Journal reported the crisis resulted in soaring defaults on apartment building debt. Also, would not surprise me by any means to start seeing eviction moratoriums come back, potentially new problems come back where the economy goes back, through a situation like we've seen in the past. That would not surprise me. And you have all these landlords extremely leveraged. Negative leverage occurs when the interest rates on multifamily buildings or portfolio mortgages rise to a point where landlords make less money on the assets than the banks, despite carrying the higher risk. Returns are already shrinking because the cost of buying multifamily buildings is soaring. In the first quarter, prices paid for apartment buildings were up 22.4% year over year. Traditional rent appreciation is about 3%, and property appreciation is about 3% nationally. So you do the math. You got 7+ years of inflation of property appreciation instead of a year. According to MSCI Real Assets, investors spent a record $63 billion on apartments in the first quarter. Investors have reportedly been buying apartment buildings at a capitalization rate as low as 3.5%. Cap rate is essentially net income, the net operating income divided by the sales price. So you just think of a multifamily property and like, okay, there's 10, hypothetically 10 apartments. They're all renting for $1,000. It's $10,000 a month in gross income times 12 months a year, $120,000 a year in gross monthly income. You factor in for the expenses. Don't consider a mortgage, but repairs and vacancies and things like that. Maybe the building's making let's say $80,000 or $85,000, right? And you simply just do the math from there. It's very, very simple, very easy, but that's essentially how they're doing it. That doesn't include CapEx or anything else. That's just a 2-second overview. New Point Real Estate Capital CEO David Brickman told the Journal. Some mortgage rates are as high as 4.5%, though, creating negative leverage. Interest rates are on the rise, too. In March, the Federal Reserve raised interest rates for the first time since 2018, boosting the benchmark by 1/4 percentage point. The Fed forecasts 6 more interest rate hikes this year. The negative leverage phenomenon has some draw in comparison to the subprime fiasco of the 2000s. You're seeing a lot of the same mistakes. Despite the troubling trend, few expect a flood of defaults, investors carrying less debt than they did in 2008, and the stability of multifamily assets is likely to remain appealing to institutional investors. Additionally, rent growth will booster returns if it keeps trends upward. But this is a very, very big caveat. We saw, traditional annual rent increases going up by about 18.4%. That's the average, right? 18.4%. So all these investors buying properties thinking that 18.4% is now going to be the new normal for rents. But if we have food going up sky high, everything else is going up sky high, how are rents going to continue to follow? It's a big question. Are we going to see a pullback in rents? Are we going to see trends changing from going from a 1-bedroom apartment, a 2-bedroom apartment, to where people start doing room shares on 3-bedroom, 4-bedroom, single-family houses, even putting 2 people inside of a room to bring down expenses? Are we going to see a change of lifestyle? It's a big question. It's all going to depend on what the actual cost of living is going to look like in the next few months and where interest rates are going to rise in the next few months. It's going to make real estate investing in multifamily much different. However, rising interest rates do figure to slow sales of multifamily properties, which totaled $3.2 billion last quarter in NYC. The first quarter marks a drastic change in the cost of debt, and the expectation is that interest rates will continue to rise. As a result, we expect momentum to continue in the second quarter as both buyers and sellers rush to complete transactions, but we also expect the second half of the year to be somewhat slower. Now, I believe we're going to see massive changes across the multifamily real estate space. I think so in a very, very big way. It's going to be, as I mentioned, it's going to be the relationship and division between landlord and tenant. It's going to be further restrictions on landlords. It's going to be this whole electrification on properties where they bring in clean energy on buildings, all these new upgrades that are going to be required. I mean, this isn't thought. This isn't like an idea. They've been talking about this. And people look into what's going on. Local Law 97 in New York, they're already talking about this. If you look at what's happening in Ithaca, New York, they're already doing this. You look at what's happening in LA, they're already doing it. Miami's already talking about a lot of these new retrofit changes. So you have all these new changes that are going to come. And I can almost promise you these corporations are going to come up with a solution that's going to be better for the world and better for renters, and everything is going to be better if they take control of these assets. That's why I think smart investors are saying, okay, what can I do to remove a little risk? What can I do to hedge a little safety? Like if I have to reduce rents 15 or 20%, can I do it? Would I lose the asset? If I have to do this, could I do it? Do I have that option? If the answer is, if rents drop 5%, I lose the building. Or if my vacancies go from 4% to 9% or 10%, I could be in default. Or if my insurance increases by 15 or 20%, I'm in very big trouble. If any of these are inside of the scope of possibilities for landlords, then that would probably be a red flag. That would, to me, would be a sign that I would need to make a change. But I think there is going to be big changes regardless of the multifamily real estate space. I'm curious as to what do you think happens next in multifamily? Are you predicting a wave of problems? Do you think corporations are going to start advancing and looking at the overall global economy, saying, hey, look at inflation. Look at what my fiat currency is doing. What if I could start really allocating this into real hard assets and hedging myself and really scaling our net worth and our equity as a company? What are your thoughts? Drop your comments below, hit the like button, subscribe here. Also subscribe to my second YouTube channel. It's going to be a podcast and an interactive show starting this week. And then also TikTok, LinkedIn, everything's in the banner. I'll catch you guys later.